Dang.
Welcome, everyone. Please make sure to pop in where you're tuning from. We always love to hear how the weather is. Rainy and stormy here in South Dakota.
Just ridiculous. It's been like 90 degrees and then
90.
today it's like 58.
We've got yeah, a little more mild here in Utah, but man, such a beautiful summer so far.
We have this weird thing that happens. It happens like once every 5 years. I'm not a meteorologist by any stretch of the imagination, but I'm pretty sure I understand what's happening. It rains so heavy in the spring and it's so hot that by the time the daytime happens, it basically evaporates and causes really high humidity. And then when the cold front of the evening kind of hits, or not the cold front, but the cold air recondenses it and it rains at night again. And so then it creates this like weird cycle. Like literally it rains every night, which is super weird. The Black Hills are gorgeous though. They're stunning this year because it's so green. But yeah.
Ray, you
Yeah.
remind me of Ted Lasso. You remember that whole thing of like being curious, right? But not judgmental. I feel like you're super curious about everything and you just like a thought comes into your mind about weather and you spend like hours researching why it's like that and developing a
I,
theory.
I'd love to say that I researched it. I didn't. I had a really good physics professor in high school. Unfortunately, he passed away before I could tell him the impact he had on his life. But he, I mean, helped me understand things at such like a it's such like a first principle level that like it's amazing if you have some great teachers like early on. It makes you like be able to see some of these things. I could be wrong, by the way. There could be like a meteorologist in here like you're an absolute idiot. There is nothing how that works at all. And that could very well be. So
Great.
let's not give me too much credit, but I appreciate that, Randall.
Hey, thanks for the banner. Thanks everyone for joining us. I'm super excited for the debate. If you haven't seen this beautiful AI generated image of Randall and Ray, here you go.
Unreal.
Screenshotting is encouraged. Um,
Mm.
so today we're going to be talking about retaining investors through value. In some sessions when I was talking to Randall and Ray, we were talking about what what should we be focused on when we're looking at investor retention? Is it the execution or is it the communication? Um, so introducing our panelists today, we got the executor, we got Ray, and then the communicator, Randall. Feel free to introduce yourselves. I'm sure everyone knows who you guys are, but they want to hear from who you guys are, and would love to just introduce yourself for those that may not know you.
As the guest, I'll go first, Ray. That's okay. And I'm
Please.
entering your home turf for this debate. I just want you to know that.
Our turf. It's our turf.
So hi guys, I've been in property management for about 25 years. Built a company and then sold that company and joined a nationwide franchise group called PMI, Property Management Inc. And I was there over the residential and commercial portfolios for 10 years. Recently joined Rentvine about 18 months ago as their chief operating officer. So excited to be here.
And I would like to think, Randall, that even though you've been labeled the communicator in this, you are somebody who enjoys great execution as well. And I love that we're getting labeled on the sides of these arguments. And I think this is going to be really great today. But the executor, although I would agree that communication is important in execution, but I'm taking the execution side on this today. So Ray Hespin, CEO of Property Meld. My background is a little wonky. I actually was in manufacturing before software, so I didn't take a traditional technology path, and I didn't take a traditional, I was never in property management. But one of the really cool things that I was able to map out from a lot and been able to fortunately learn is like there's a lot of parallel things that are happening in other industries or have and mature ones that there's a lot that you can bring over some of those best things. So Property Meld, we're over 800,000 rental units on our platform, incredibly deep data. And so we're really trying to lean in on property maintenance operations as really a property management first principle. So Anyway, super excited to be on here with Randall, and thank you, Liz, for putting this together as well.
Can we
Yeah,
call Ray the
absolutely.
executioner instead of the executor? Is that okay?
Ooh, kind of like that, honestly.
Oh, super valid. Sorry, Ray. But
Mm,
so let's really dive into why we're here today. So, let's talk about the importance of making investor retention a priority. Why now? I mean, everyone's talking about different challenges in this space, but why are we here talking about investor retention?
So just to lead off, I've always felt like, what we're trying to do on the single family property management side is widen the gap between what a third party manager does and what a self manager does. And it feels like there's a lot of always technology coming out in both areas, one to try to widen the gap and one to try to narrow the gap. And so when we talk about like the vision of the industry, why it matters now is that as technology develops, it's going to either push the gap wider or more narrow. And so that's kind of what I think about, and what keeps me up at night, honestly, is trying to be more innovative for that for that third party manager.
I think that's a great lens, Randall, and I think the pressure that we're seeing in kind of the macro environment, and I was kind of we had the post-COVID market that I think everybody remembers that it was just like you couldn't screw it up. Like everybody's assets values are climbing like crazy, rents climbing 8, 10, 12% a year. If you lose a resident, who cares? If it costs money to renovate, who cares? And so I think we're seeing what is almost like a complete 180 from that. And I think why like investor retention, or at least when we, talk to our customers or other people in the industry in general, is like, rents compressing. The investor is feeling more squeezed financially, and there is like this element, as kind of like Randall said, is like there's a very, very tempting thing, especially when people's monthly cash flows on the line and starting to get harder and harder. It's like maybe I'll just bring this in myself. And the reality is, from an NOI standpoint, I'm very bullish on what property managers can do, but like conveying your value is become harder because that monthly check that they're getting is smaller and they've got some real decisions to make, and some of them are underwater. And so I think this particular macro environment of rents not going up, the asset values of homes not going up, and still inflation effects are still there, it's creating a really, really hard time. Or let me put it this way, a more critical time to demonstrate that delta, as Randall was kind of putting between should you do this yourself or what can I do for you to help improve your outcome even better?
Yeah, and like owning property and owning investments that you control personally has always kind of been I feel like an American way to think about that. And so like the idea that there's more market pressure is key to trying to add value today, because as you know, the you mentioned the pressure on rent, but also like the idea that the property managers used to be considered just a line item on the budget, almost coming kind of a necessary evil, especially if it's out of market.
Hmm.
Making the shift from that to like the keystone, to put it in NARPM's mission, right, which is to become the keystone of property management or successful real estate investing. That's like, we are, maybe the pendulum is starting to swing, I feel like, over to that keystone side. But that's what we're all trying to do. And you guys have done an especially good job at that, I feel like at Meld.
Well, thanks for that, Randall. I think that what you say is really key in this, and again, why everyone should care. And I remember I graduated college in '09, and that was during the last housing crisis. And so I went to the cement industry and I interned. So I actually got to see both sides of this. I'm going to get to a point of the story, but like when I would like intern in '06, '07 in the cement industry, they were printing money, did not give two shits about what they spent money on. We need somebody new, all that happened. Well, '09, construction materials were in a major hurt. And, in hindsight, it was one of the most important movements that industry experienced, was really thinking about what do we need to become excellent at and where's the fluff. And so I do think with this macro environment, it's kind of pressure testing our industry to go, just like Randall was saying, can we really make this leap? And you almost have to. Long term, it's got to be where it goes, period. And I think this macro environment is kind of pressure testing who's going to figure it out and who's going to get really good at it. And that way, when the good times return, just like the cement industry did, it's like the margins are better, business is easier. And so I think there's a major gift here if we kind of accept it for what it is, that we know what we have to figure out in these hard times, and these hard times are making sure that we figure it out.
I love it.
Um,
And we're moving closer to what I think of as the unicorn statistic, which is show me that managing a property through a third party manager is more, it makes more money, performs better, is a better investment pathway than self-managing. That's the unicorn. And that is what every property manager needs to try to drive.
well, debate's over because I agree with Randall.
So I'm going to launch a poll before we get into the debate. But as I launch this poll, I just really want to get a good understanding of our viewership and where they stand as far as what is most valuable that they perceive to their investors. But as I launch that, I also want you guys to kind of chat about like what patterns are we seeing and why investors leave or stay loyal. So is there a certain pattern? Is there something specific that they're looking for? And that's why they choose to stay with a company or not.
Lead us out, Ray.
What what's that, Randall? Sorry.
Oh, sorry. Liz, I wasn't sure if you were asking us for our thoughts on that or if you
Yeah,
were
yeah.
setting up the poll.
Oh,
Because I think
sure. So
Ray, I know Ray has an amazing answer to this, so I want to hear that, and then I want to counterpoint it once he's done.
Oh, this is great. Yeah, you don't even know what I'm going to say, Randall. It could be, and then you're going to have to counterpoint. So now my job is to figure out what your counterpoint is, and I'm just going to say it and take it from you. But no, I'll say this. So we did, and we really are honestly due for a refresh on this, just to understand how it's sitting in the current market. But I had a customer who works with a lot of institutional investors, and they gave me a great nugget to kind of like launch off of. This individual told me, we ended up finding that institutional investors, once cost to maintain exceeded 12% of rent roll, they would leave drastically. But there was like no data on retail investors, like, the accidental landlords, the one-off out-of-stater, the maybe 1 to 2 homes, like, what the vast majority, particularly single family is. And so we did, we actually did a study. It was around 350,000 investors, and we were able to correlate a bunch of things. And the interesting thing about this data is we know our customers vary on how they operate communication with investors. I know Rentvine has a thesis on how they're approaching it. I think you guys have really leaned in there. But this was done in 21, I think, or 2020. And the thing that we ended up finding out is that rule that institutional investors holds almost identically true to retail. Like, and they don't know it. Like, so assuming all the whatever, but it actually showed me how important that bottom line number is and what people's perceive that's a good return versus not, even if it's in the gut or whatever book was written or whoever's producing, like, that's fine. And so it almost didn't matter when you looked at the general thing. The other thing we ended up finding out when people did more work for property managers, particularly in maintenance, um, you ended up finding around 12% more maintenance actions, I think it is. I could be wrong on that one. No, it's 21%. Sorry. I don't have dyslexia, but sometimes I'll share symptoms. But it was like they did more work at a lower cost. So there's like these interesting things on value. And then, we ended up finding out that resident satisfaction actually correlated really well to investor retention as well. And so it kind of, when you see these patterns of like how people would define what good property management is, like I hang on to the resident, I keep your costs down, it showed a very, very strong correlation. And so, very, very big believer that clearly how services are rendered and delivered has a pretty significant delta to retained or churned investors.
Yeah, I love that kind of that research. Remember that 90% of the single family market is held by investors who are considered very small investors by HUD. Oh, sweet. I got the balloons on that.
Nice.
And when, yeah, when that happens, or that definition of very small investor means that they own 10 or less properties. And I feel like it's pretty important to segment, even though Ray, I feel like you're lumping in like these investors with the institutional. In my research and in my experience, I think there are other things, other factors driving why a property manager is chosen for that demographic of investor, for that small investor versus institutional. And it's more about trust. And so, like in my opinion, property management is still a very much a trust business. It's why when you list the reasons why a property management company is chosen, and this was through a poll that we did of about 1,000 customers or 1,000 property owners. At the very bottom of the list, so there were 9 things that we gave them to choose from. Very bottom was cost, which is maybe not surprising, or maybe surprising to some of you guys, but cost is not really a big factor in choosing a property manager. But the top 3, number 1, honesty and integrity.
Hmm.
Number 2, availability of the manager. And number 3, accurate accounting. And like, so those for me drive what you see when you go to shop a lot of property managers. You see on their site that type of language, trust, honesty, we manage it like it's our own, like all of those things. And they have to do specifically with kind of how the property manager is communicating to that owner. So in my opinion, in today's world, the communication piece is more valuable than just this set it and forget it. Even if I have a great executioner in Ray Hespin, no, an executor. Like I just feel like that communication piece is should be prioritized above it and more valuable.
So
You
it sounds
know,
like we're getting into the debate. Should we? I
I
love
don't
this.
want, I actually want to jump in because I have a super, super relevant story, by the way. So I don't know if I'm as much debating on this. I actually am a big believer, Randall. And maybe the thing is like, does communication build trust better or does execution build trust better? Maybe there, but I would definitely agree on that. Now, I'll tell you one thing that's really interesting. So I took my car down. I ended up getting some body work on my car. And anyways, I had to take it back. And I took a lift back to the office. And anyways, like I was talking to the gal and I said, great place. These people are writing, something that they didn't get right. And I said, I really appreciate that. Really trustworthy people. They're not charging me. Like, talk to the owner. I'm so sorry. Yeah. And she's like, well, good, because a lot of like car shops and mechanic shops are just, whatever. And I was thinking about this on the way, and I was like, what's so interesting about service-based businesses, and I would say that that's one of the things that that we would put ourselves in is like, if I do more work, I get paid more money. So you have a very misaligned incentive plan that can create a lot of mistrust. So, you think about car mechanics, body work, doctors potentially are starting to get into that mix that people care more that they trust you and because they know you could make more money if they deliver more goods, whether you need it or not. And so that misaligned like alignment and incentives, I think just by the very nature creates distrust from people. And that the Lyft driver I was talking to was like that. And it's like, that's why if you find your mechanic or your doctor, you don't leave them, is because you built that trust. And it's like, if I need it, I need it. If I don't, I don't. And I'm willing to go with you. You're the expert. But it can very much be missing in property management. So
And yeah, I love that point, Ray. I'm like thinking through my contacts in my phone. One of the most valuable contacts that I have, and this is so dumb, is my windshield guy. I've got a windshield guy because I live in Utah, rocks flying everywhere all the time, and our windshields are getting busted all the time. But there's a guy, I don't even know what he charges me. Well, I mean, like that's an afterthought of what he charges me, but I know he's trustworthy because when I first met with him, he built immediate credibility with me by talking about this 2004 Lexus that I had that was a super old car, but it needs a very unique windshield. And here's what I'm going to do. I'm going to show you all this stuff. It was so transparent, and he was so good at communicating with me through that repair that I was like, all right, this is my guy. And I've taken all of our cars back to him over the last few years. And it's like, I've established that trust with him to where if he recommends something when I'm there, if he recommends a service, I'm like, hell yeah, do that. So
Yeah.
like that communication for me was the crux of that.
But you could also probably agree that if you did a trash job on actually putting your windshield in, like you wouldn't care how great his communication was, right?
Very good.
Anyways,
You're
let's
right.
go into the debate, shall we? No.
Yeah. Yeah. No, that was exactly what I was going to say too. It's just Randall, if even if he was a really great communicator, if he did a poor job, would you still call him? So I think that's where like really understanding like which one is more important or are they equally important? And so we'll get into that. So I really want to establish both sides. So Ray, as like when it comes to execution, do you believe that the results are enough to retain investor trust?
I should have actually pulled this up. I'm going to pull this up in 2 seconds. One of the things I was actually going to say is like how much execution matters to people. I was actually going to give one data point from this from the resident renewal report that we did, and it's a good one. But I want to like do it with residents because I think a lot of the times property managers have varying degrees, but like when it comes to renting, it's a conditioned experience. If they're a renter, they probably rented before another property, and it's like, so they've been to multiple, and probably a little bit less of a trust exercise of me being there as much as it is, you just need to make my home decent. So I'm gonna give a data point right here. And that data point, and this is a cool one, so that you heard it here first, folks. Um, the the difference between a resident having repairs in the first 30 to 90 days, and even more specifically, increases the likelihood of first year lease churn by 90%. I will say that again because I think this is comes down to it. Now, I'm not saying 90% lease churn increases it by 90%. If you have a repair within the first 30 to 90 days, and I got to look at the specifics of this, you actually will increase the likelihood of that lease churn in the first year. And so the whole thing is, right? And so if you were to dissect and guess why these things are, if I have something broken, when I move in and it's been deemed habit worthy and whatever, it's like there's a moment where Sam, gosh dang it, Sam.
Sam's got you.
Sam's coming in, correlation causation. Sam, I will tell you what, there's no this report is there's no way. It looks at it 9 different ways. But okay, let's go with you. But the whole thing is let's assume that is the case. And let's assume, just like we would anywhere, is like you find dust in the corner, right? Ugh, like it's kind of like when you hop into a rental car. If that rental car is nice and it smells nice and whatever, if you walk into that car and it smells, automatic mental triggering, and then what happens to the psychological nature afterwards, right? It's like, no, that's broke too. Oh, that's broke too. Or yeah, that's not working the way it is. And so those things are very much, to me, very indicative of execution-based trust of like how good this property is or how good whatever. And so I very much think that there's a very corollary to that. Like there's some moments early on in the relationship that the communication I do think is like, I'm not advocating against it, but like being able to deliver the value very specifically clearly has a mathematical impact on residents. And this is on a study of 110,000 leases, first year leases. So it's not a joke of a sample size. And so it's big. So I do think very similar exists on the investor side, that you can communicate all you want. If the results aren't there, it can make that trust broken very, very quickly.
I think that's a great position. I think it's interesting that you chose a tenant as an example, but the valid point is that vacancy is still the highest cost for an investment. I mean, vacancy breaks your profit by a wide margin compared to any other thing that you can do on your property. So keeping that tenant retention top of mind is important. So not to build on your point a little more, Ray, but
You
I
can build
love
on
it and I I agree with the thinking. But to Sam's point, right, there is not necessarily a correlation between canceling the lease and that kind of like initial experience from a repair side. However, if there are repairs in a property and the turn wasn't done well by the property manager, that may show some of the flaws on the manager themselves that lead to other reasons why they're canceling that lease within a year. I think it's property managers have a very tough position to stand between the investor and the tenant. And it feels like the shift has been, the pressure that we talked about earlier in the industry has been on us to more be the ambassador versus, just the wife beating, shirt wearing plunger guy who's in there trying to take care of stuff as it arrives. So there's been a sophistication, and a big piece of that in the property management side is on communication. So the position that I would take is that, communication is what today's investors expect more so than 10 years ago. And it is the most important way to establish trust. And I think someone put in the chat too, but if you have someone who is communicating very well, you never want to see the repair show up for the first time, the charge show up for the first time on next month's statement, right? That the importance of communicating in advance what's going on and what is happening on that investment, a quick touch point. And we know that like today's investor, it used to be that you could just like hire a property manager just to get the property rented. That's the only goal that the PM had. That's the only reason why someone would hire a property manager. But today, that feels like it's not enough. There's too many tools. There's too many opportunities to communicate with that investor and like become a true consultant to them versus just a maintenance guy.
Yeah, and I think just to build on, and I recognize we've kind of taken a fun stance, so we're going to talk about this. I think Rentvine, you guys have, I think the thing that we've heard is how much investments you've made from the investor experience, how they're seeing reporting, and I think that's one of the big reasons why a lot of people tend to choose Rentvine outside of it being an accounting system and being a great service. But I think there's an element where if you don't get credit for the work that you've done, then it doesn't matter. And I'll give you. And with this resident retention report, and it's only because it's such a large sample size. And I think if you were
Huge.
to, yeah, we ended up finding out that basically time to assign was highly corollary to lease churn as well in the first year, even if the repair speed was faster. Now, the reason this is important in the way our platform works is a lot of the times, anytime something happens, and a lot of it happens automatically, it communicates with the resident, lets them know it's happening. And so you could reasonably assume that the longer time to assign means the longer time to communicate that you're handling it. And there's a very sensitive one, especially with what would be considered key systems, air conditioners, water systems, heating systems, that is pretty drastic. And so if you don't communicate, even if you execute of what's happening or how you're navigating it, I think the data also supports, Randall, that if you're not addressing some of that, you can sign up for a churned relationship. I'm obviously using the resident retention because I've got it right here, but I think data showing that some of these things really matter. So
yeah. And I think David in the chat makes a fantastic point. He says there is a threshold for how many times you can communicate your way out of execution that doesn't meet expectations. And that is so true. Like, I feel like that report is crucial, Ray. So I don't mean to minimize it. And maybe, again, the lens of communicating with the tenant versus the owner are different, but you guys have built incredible tools. We tried to do the same thing of kind of doing both sides where you're giving enough tools and details to both your tenant to be able to have a smooth relationship and an effective relationship. The point on time to assign is crucial because that really is indicative of your execution. I feel like in the company, how efficient are you at, having that vendor relationship locked and loaded, at having the availability, at communicating quickly and like getting that on the stage. But you also have to spend the time and effort to communicate back to the investor. What are you doing? What is happening on this? And if you handle it well, if you're like, hey, low time to assign, we took care of the repair. Here's what happened. Here's what I did. Sort almost like hashtag you're welcome. You're not going to say that, but like it's just that piece has to be there behind that scene.
I'm even gonna go. I don't even know why I'm arguing on the side of execution because I'm gonna like just talk about how important. I'll tell you this other thing that's really important in this shift. So if we start from this aspect that our job, and Randall, I think you kind of talked about it earlier, that we have to really start being the ambassador and less a service provider, right? And so really, if we were to pick a North Star metric, and Peter Lohman and I have talked about this, like, are you responsible for NOI? I don't think the answer is no, but I think the responsibility is to improve it, right, against what the landlord could do.
100%. The
And
unicorn
yeah,
statistic.
exactly. And so some of the things are going to be really important. So we launched a thing. There's probably 30 companies that have it now. Should be GA for most of our customers that are on our property maintenance ops thing, to where like they got insights, but we're actually showing lease churn risk. So we're taking this data from resident retention. Now imagine you got to talk to an investor and you say, listen, I know we're trying to keep your costs down, and I know I actually didn't pick the cheapest vendor. I've got to have justification for that
Mhm.
because it actually impacts you better. And being able to do that is like really hard. So one of the things that we do is we're showing resident lease churn risk and some indicators, as well as we're showing you your vendors or technicians and how far out the repairs are being scheduled right now, how good they are at that particular type of repair, how many times they've done that particular thing, and we're even doing costs there. So that way you can go, not the cheapest, but considering this is a resident lease churn risk and it costs you about $5,000 to turn a property and your lost rent, like we've got to probably drastically level up our communication game to actually be able to impact NOI, because we're going to make some more counterintuitive decisions against historical. Be like, I'm losing money on this property. Why did you choose the more expensive vendor? And it's like, well, because the other ones suck and they're not good, and they're like 10 days out, and like, how much do you want that resident to be gone? And so I do think there's an element in this next wave. I'd probably say in the next 12 to 18 months, especially in this thing, that we've got to find a way to do what you're talking about and drastically level that up, because there's going to be some gnarly things that impact NOI in a very positive way, and we got to make a case for it.
So yeah, and so Ray, I want to be contrarian for just a second. I'm going to be a hostile witness here on your panel.
Yes.
I feel like maintenance execution and execution generally on the property management side is just table stakes. It's what an investor would expect. It's just like, hey, can you can you do a good job of maintaining my property? You should be an expert in like how to maintain properties. That's what you do, right? And I'm not trying to diminish that, but I just think that I feel like investors are viewing property management as just a commodity where everyone is doing about the same level of service or the same level of execution. So my proposal is that to make the shift from just a property manager to a partner or to an advisor to someone who they're going to consult, you're going to have to do something above and beyond just the table stakes, right? And that's why companies like, for example, Blanket, Rescover, Lineage, those companies are coming into the space for a reason. They are seeing an opportunity to raise the profile of what a property management manager can do for an investor to kind of become that advisor and that partner. And so Rentvine, we're trying to look around that corner, and I know you guys are as well. Look down the street and see what's coming and how we can get it in front of that. One example from those three companies that I mentioned is that they're all kind of focused on helping that investor realize a gain long term, get some tax advice, and kind of buy additional properties. That's sort of what you're sensing from those guys. How do we buy more? How do we become more successful investors and help them sell more? So that idea of a marketplace where they can buy more investments kind of speaks to that transition from table stakes to advisor.
Yeah. And I think I even think maybe even a little bit past table stakes, because one of the things, and I talked about at MX Summit, so if anybody has an opportunity to come at MX Summit, Randall and his team will be there. It's a great industry conference, but I'll talk about what I talked about last time was that like If you look at all the investments into prop tech, property technology is a stupid way that private equity people like insure tech. It's like they show insurance and tech and they shorten it all, but prop tech. And so I was showing this graph of basically all this investment, and I'm like, but there's a lot of it going to landlord tools. Like, and so if we think about, where are the places that you can differentiate, it is kind of there creates parity on things. And I think one of the hardest things is maintenance because it's managing vendor relationships. If you're running internal technicians, which I posted this morning, we're seeing a lot more of. You're managing costs, buying power, procurement, all like compliant, like there's a lot of other things that are part of that. And so we almost have to make that more of a case on the regular, because if it is self-showing alone, we're in trouble. So I think even just outside of table stakes, it's like the thing that's the variable that's hard. And I do like those tools that you were mentioning, and we got to convey that value. I will say one of the things, and Randall, I don't know if you've seen this, I think one of the biggest reasons why communication is so hard, also is because of the extremely high turnover nature of our business. You've got, maintenance coordinators, and that's one of the things what we've been talking about, perfect decision. How do you turn the 60-day maintenance coordinator into somebody that's a rock star for over 20 years, like that. And communication is the same thing. There's certain people at property management companies that you do not talk to the investor, nor you, nor you, nor you. Bill or Jane are the only ones, and they're the only ones you get to talk to. And so it makes it really hard. And I do think what those tools are doing that you mentioned make it a lot more of a systemic communication and less reliant on, there's rock star brokers that can hop into a call and be just like your windshield guy.
Yeah.
Like, and they can go and have that, and that's great, but it doesn't scale, and everybody's looking for that. And longer term, it's not going to be it. So I do think there is an element that if we do choose to be the communicator, it's got to be ways to systemically do it. And I think the thing that you mentioned, Blanket, familiar with their technology, is people believe numbers 10 times more than words anyways. If you say, I'm Randall, trust me, this is a great investment. No, actually, this investment statistically has this amount of likelihood and yada, yada. Oh, okay.
Yeah.
Numbers, but.
In order to build trust, you have to have credibility. If you don't have credibility, you have no chance of establishing trust. I always say that the formula for trust is credibility plus empathy. And unfortunately, a lot of property managers, because they built the business themselves, they're usually the broker owner. They are the ones establishing that trust with their investors. And so, Ray, it's really hard to let go of that. Like when you like, who is going to talk to this owner? Who's going to talk to them about their performance of their investment? It's all in many cases, like I would say 75% plus, it's the owner of the business that has that trust relationship and is now going to talk to them or sit down and maybe quarterly. And I think we saw on the poll, like how frequently are you speaking or reporting? Like most great companies have established a regimen of where they're reaching out to that investor and having that proactive communication. And like in most cases, it's the owner of the business. There's just something local in nature about property management or that trust business. Like if my windshield guy were some big company and I don't know if he were a part of, he's not, he's just one person, just a guy in a shop doing it. That like helps me feel like this guy, I can text him and it's okay. I don't know why that, like there's a mentality in the service industry, I feel like.
I don't know like a parallel, because I think one of the challenging things, think about service-based businesses that have done well on this. So if we like think financial advisors, nobody checks every month, because there'd be months you'd be crying on the floor curled up on a ball, and then there'd be months you'd be like, awesome, I'm gonna go do it. But it's like it doesn't matter. This is your asset long term, and you realize that you need to. And so financial advisors, for some reason, get a pass. And I was thinking about like, what are they doing that's so different than what we're doing? And I do think that trust element is a big thing, but it's such a financial thing. And I also think there's industry conditioning that people understand stock market goes up and down, 401ks go up and down, and like kind of so I think one of the things, even as we're kicking out this paper, is actually more for our customers to go out to investors and be like, this is how much of a math game that maintenance is. Like, you need to just understand we're running at this. We've got our SLAs that align to this. And this is, that's why sometimes we'll pick higher amounts and sometimes we'll pick lower amounts. It's because there's that major gap in knowledge as well, that I think that that ends up bringing to that broker and owner to have that one conversation and educate everything while delivering what we're doing at the same time. And that is just too hard and unfortunately not scalable as well.
Ray, I got to take off my debate hat for a second and just let you know that what you just said is kind of what I've always seen the massive value in Meld. What you guys have done there is absolutely provide statistics, help the property manager do a better job of showing value. And it's strengthening the relationship, which is the mission at Rentvine, is to strengthen the relationship that a property manager has with their tenant and with their owner. And I feel like you guys have taken that same approach of just viewing the importance of both relationships, even though they're often at odds. That property manager has to sit between and figure out a way to add value and communicate well with both. So I have always admired your focus on statistics and maintenance as a driving factor in what is helping to retain tenants long term, which ultimately drives the investor return. It's crazy. It's awesome.
Well, thank you. Thanks for taking the debate hat off. You can keep your debate hat off
I'll
as
put it
much as
back
you
on
want.
now.
You
So I
know,
want to jump. Oh, geez. Okay, Ray. I have Mike had a question, and I would love to get your guys' insight. How can communication and execution help detach the owner of the business from that communication when their agenda is full and now communication isn't meeting expectations?
say that again. Sorry.
How
One more
can
time.
how can communication and execution help detach the owner of the business from that communication? I think that's when their agenda is full and now
So like
communication isn't met.
super
Mm.
busy, right? Don't have time
That's what yeah,
to communicate with each individual investor. Is that kind of what they're getting at?
yeah, that's what I'm understanding. Mike, if you want to clarify, feel free, but that's what I'm understanding.
I see that question in the chat too. Go ahead, Ray.
So
Yes.
I think one of the things that we talk about is like the goal is not, it admittedly is not to beat the property manager next door as much as I think that's the amount of rentals that are managed by self-managed landlords like 22 million, and professionally managed single family is 8 million, and professionally managed multifamily is like 13 million. There's a massive arm, and that's where a lot of the times we lose investors to is like this property management's just too expensive and not like my property manager sucks. Like, and so really it's making sure that we're playing the game. You have to have this, and you should be rethinking about how you should be running a rental period, and it's something that you're going to have a very hard time doing. And so if you realize that that's like the goal of all communication, I think that's one of the things that's really important is recognizing not these people over here, but like, here's the things that we're doing that I'm 100% positive you would not be doing. And it's really important for NOI. So I use the resident retention as an example. If you were to sit there and bring in a customer and, you're sitting there and running on, be like, and you're doing a questionnaire and being like, well, how fast are you getting repairs done? Oh, you don't know? Awesome. Well, you got Bill? Perfect. Bill licensed? Is he insured? When's the last time you've been sued? You know, and awesome. And the whole thing is I'm not doing that and be like, and then if you were to pull out a chart and sit there and go, well, we like to run our SLAs on maintenance of this for these types of repair, this for this type of repair, and this to that type of repair because we know it changes the odds and whatever, that moment is really what does it. And so then how do you play offense on that every month or every quarter? And Randall, I think your team probably does a lot more on this, but how do you keep having that conversation on the offense that you're sitting there going, I'm doing something you would never do on your own, and it's creating a statistically better outcome than you. And I think back to that trust area and communication, I think that's where Blanket and some of these other tools that you were kind of mentioning, I'm so glad they're popping out because that's the sort of stuff that has to happen. Here's what I'm doing. I guarantee you're not doing yourself. And even more so, I think the thing we just got to keep threading in and is property managers have buying power, they have resourcing, they have focus.
Yes, they do.
There's
Yeah.
so many things that we just have to do, not just, hey, here's how your thing performing, because the landlord tools will eventually come to that as well. We got to constantly say what I can do that even if you have the exact same tooling, you'll never be able to beat what I can do for you.
I love that point, Ray. And I would add to it, I recently spoke at I think it was a NARPM national or broker owner event. And I had every property manager in the room stand up. And this is kind of to emphasize that investor side. Had everyone stand up. And then I read through a bunch of financial terms related to real estate investing. And I had the room sit down as they do not know or did not know what that term meant. And after about 4 or 5 terms, I had the entire room just about sitting down. I don't think anyone made it through the list of 10 terms. And the goal of that exercise was to show that, hey, if you're going to retain an investor, you need to educate yourself on what is success for real estate investing look like. Remember that, like, for example, the average door count of someone in our system at Rentvine of an owner is 2 to 3 doors or even less. I think it's just under two doors across all of our hundreds of thousands of properties. So that investor most likely does not know the successful KPIs for real estate investing. So you have an opportunity on a regular basis to educate them and to become that repository of knowledge where you can move from just an executor into a advisor role in terms of their real estate investment. And making that shift for property managers, I feel like is the area that they can add value. And I will not disagree on anything you said, Ray, about that maintenance side and the importance of executing successfully. But you've got to educate the investor if you want to create more.
And I think particularly now, I was kind of thinking about it because like one of the things that we've been focused on is this resident renewal. Because today it matters, but if we were to go back to 2021, everybody would take that piece of paper, throw it up in a garbage can and light it on
Right.
fire. And so it is going to be able to be more dynamic. What does the investor care about? And how do I keep communicating that? Because if the rental, there's a relationship that if the rental amounts go up, then it's all going to be about communicating the turnover, what's happening in the market, how much we should rent for. Like now it's just how do I keep your costs down? How do I keep the resident in there? And one of the things I do think is really important, and I've been a very big advocate of this, I just kind of pulled up some things. So this resident lease term report, like we do think there's an element where operators can change the lease renewal rates by anywhere from 5 to 12%. Depending on the markets. Multifamily has higher lease churn, single family has less, and so there's some deltas there. But the point being is if you do that and you subsequently alter occupancy rate as a percentage of your months, there's you can actually pay for 2/3 of the property management cost and revenue and profit. Like it's pretty drastic if you're able to do it. And so I think now, back to the execution is going to be really important, but I think the only way that a lot of these moves are going to be able to happen of like, this is why we chose this vendor or this technicians or that person, like you're going to have some conversations. Why didn't you just send the cheapest person? Or why didn't you send that? You've got to be able to communicate these decisions to actually save that money for them. So I do think, not that we were planning on agreeing, we were planning on agreeing, but like, we're going to have to become excellent communicators simultaneously while moving execution.
Yeah.
Or else we're not going to be able to make the case to do the right things to increase renewal rates. And I see there's a gentleman on here, Mr. Paul Rhodes, who's Mr. Maintenance and Multifamily, is a brilliant follow. I do think that in this current environment, like CFOs really need to care about maintenance operations because of the financial impacts it can have. And so that means you have to communicate how they can actually impact it. And so you couldn't get the resource to execute if you can't make the case to, who the powers that be financially are.
I could not agree with you more, Ray. In fact, when I was at PMI, we had an opportunity to bid on a contract of a nationwide investment firm that had, I think, I don't know, 20 or 25,000 homes. You know what their first question was? Tell us how you do your maintenance. Show us the KPIs and reporting around how to do maintenance on your properties. And that was a little bit surprising to us. But as you grow and scale, that obviously at a high level is one of the key things that people are looking for in a successful property manager. As far as like and Ray, you mentioned that lease renewal process. At Rentvine, we're kind of focused on like those processes. Like when you go into a room and you see like very successful workflow focused companies, it makes you realize that there is an opportunity to improve that experience for us, at least at Rentvine. That's what we're thinking. If we can improve a lease renewal experience that has communication points, touch points at the right time and the right people involved, you can increase your retention, you can increase your value because you're recommending the correct raise of rent. But imagine all the tools that you need to try to do that. And it's why property managers end up having a tech stack that like has 9 or 10 or 11 different solutions, because they're trying to figure out more and more ways to add value and communicate better, and to execute, right? And like you can divide the conference, the NARPM conference vendor room, into those focused on execution and those focused on communication.
So
That is astute.
it sounds like there's an ideal balance here. So
It's both.
like
It's not an idea.
yes,
More of both.
more more of both. So Molly had a great question. She's like, how does a property manager determine how much communication is needed? Like, how do you decide? Is there a point where you over communicate?
Definitely. Yeah. And I think earlier in the chat, we talked about like, if you're not executing well and you're over communicating, you've taken a bazooka and just exploded your relationship and that trust. You've undermined everything. And so, and different investors will want to be communicated with differently. So you want some flexibility. You probably want to establish early on in your relationship, how do you want to be communicated with? How frequently or should I reach out to you? And figure out what style of communication they like as well. That would be my advice.
And so what I'm kind of seeing, as far as like, it sounds like execution is creating the value, but communication maintains that confidence when you are executing. So, I mean,
I love
would
that,
I be
Liz.
right to
Thanks
say
for
that?
bridging the gap.
That was
I,
that was very
well
concise.
said.
oh, well, thank you. Thank you. So I know there is a balance, and I know there's some like exciting news that we want to talk about as well. But I know Ray kind of mentioned this as well, like Rentvine is coming to MX Summit. Randall's going to be speaking more on this topic. So I'm super excited to hear you. And I think there's been a lot of questions too. Why is Rentvine coming to MX Summit when they aren't integrated?
We just appreciate the invitation. We're happy to be there. And as a longtime fan of Meld and Property Meld and what you guys are doing, I'm just like super excited. I won't say more. Ray, I'll leave that to you.
Lips are sealed here, but I'm excited. Randall, you and the team are coming down. I think you guys have, and knowing some of your earlier customer base have probably been some of the leaders in property management in terms of some of the stuff, and you can see it in the product that you guys are building. You obviously had a big fingerprint on PMI and how that's running, and so I think there's an element where we see some really awesome opportunities that where we can kind of bridge some of the execution and communication components. But the TLDR, you got to come to the MX Summit to find out and see Randall while he's there. So
Love it.
Yeah.
Of course, you, Ray, you're my favorite speaker, man. I love coming to your sessions.
the pressure is on. I'm really excited. Here's what I'm most excited about, Randall. I'm most excited that property managers can start playing offense if we communicate well on what we can do. And so I always joke that if you do talk with property managers that deal with institutional clients, like the number one thing's be like, but that toilet handle should have been $7.99. Why did you pay $9.12 for it? And it's like, this is so unvaluable conversation. I think our industry, if we're communicating well and we're learning the things that we are about being able to alter NOI statistically, they're going to start caring more about how we're executing. And so communicating that's going to be important. But I think we're going to really drastically change that conversation in the coming, 6 to 18 months of, what, quit caring about the toilet handle. You need to care about how fast I'm getting things done and how well I'm communicating. More than that, more than anything, just so that way I get a better financial return. And I think that's going to be one of the biggest shifts. So that's what I'm going to be talking about, and the data that supports that and all that. And I'm optimistic that we can quit being the industry that plays defense to performance and cost reductions, and we can start playing offense to why we're the leaders as industry experts and why you should allow us to trust your property with us, and we're going to do the right thing. So I'm very excited this year.
I love that, Ray. Rentvine's mission is to try to be the property technology partner that property managers deserve. Bit of a mouthful, but the word deserve is very intentionally chosen because of what you said. Like it's we are leveling up. We're sophisticated now. We're asset managers versus just you know, Mr. Roper, if you're old enough to remember Three's Company. That's who we are today, and we need the tech that that will allow you guys to shine.
Love that. So Molly dropped a unique discount code for anyone on this webinar. Please make sure you have the MX Summit on your calendar. It's going to be a fun time. But if are there any other questions, any other exciting tidbits before I say tidbits. Oh my God.
This is a tough economy, Liz. Why on earth are we giving discounts out? That's my question. Gosh dang, we're
Hey,
lucky the CEOs
I know
not
there's
running
enough
ticket
value there
prices.
already, man. Super
Yeah.
I
stoked for
love
the
that.
next summit.
It's
Yeah,
great.
it's gonna be awesome. Thanks, Ray and team, for putting it on and for doing such a great job with an amazing conference. You guys are the best, seriously.
Oh, thank
Wow.
you.
Oh, geez. Thank
You're
you.
welcome back anytime, Randall. This is great.
Woohoo!
Thank you so much for everyone that was able to attend, and we'll see you next time, and we'll see you at MX Summit. Thanks, Randall and Ray.
Thanks,
Thanks
guys.
a lot. See
See
ya.
ya.
See ya.